Welcome. We're back. One of the craziest days that I can ever remember as a trader. Started off with the stocks being absolutely horrible, and then Bitcoin having a huge drop, which is now recovering a bit, but not too much. It was very wild today. There was a lot of activity across the market, from stocks to crypto to volatility indices to US 10-year yields to the dollar to metals. Like, everything was just moving, and most things did not move in a good direction. Most things went down. So currently we are, I believe, on track to have, there's still 2 days left and anything can happen in 2 days, but as of like right now, it's pretty much the worst week. Let me skip that song. It's pretty much the worst week since October, for the NASDAQ for sure. For the S&P, I think it's one of the worst weeks in a while. And just it's been really tough for stocks. NASDAQ ended up filling another gap today. It filled the final gap. We'll talk about it in a little bit, but before we get really into stocks, let's talk about Bitcoin. It was already starting off the day pretty rough, and I think that's interesting because you had kind of inflation scares going on with some numbers that came out, and Bitcoin's supposed to be this store of value for hedging against inflation, right? Because of limited supply. But Bitcoin started off the day rough, but it wasn't like super bad. It was down a little bit, 3-4%. And then Elon Musk tweeted, and that's when things really escalated. So from what I can remember, right before Elon Musk tweeted, Bitcoin was like right around over here. It was at right above 54K. And then Elon Musk put out a tweet saying that Tesla is no longer going to be accepting Bitcoin for payments, I believe. And his reasoning for that was the energy that it takes to mine Bitcoin is just too much. So there's still going to be, I think he said they're still going to be holding their position and doing other things with it. But obviously people did not react well to that tweet. And pretty much like right after that tweet, within like a couple hours, Bitcoin dropped about 15%. Now it's bounced up. So from basically where it was when the tweet went out to where it is right now, it's down about 8%. So you recovered about halfway back up. It's very, very volatile right now. I don't remember last time I've seen Bitcoin move this quickly. Coinbase went down for a little bit. Just a lot of crazy things going on. I saw a $1,000 tick on Bitcoin, which means in 1 second, Bitcoin moved $1,000. That takes a lot of money to happen that quickly. So people were really freaking out and panic buying and panic selling. It's just been really crazy, and it's still kind of like an indecision candle right now. Just super high volatility. MARA, the stock, which is like a crypto mining stock, was down like 18% after hours. Ethereum's held up decently. A lot of altcoins have dumped. So very, very volatile overnight for crypto. And let's talk about stocks for a little bit. Make sure to hit that like button and hit that subscribe button. Stocks had another horrible day. The Russell was down over 3%, the Nasdaq was down over 2.5%, and the S&P was down over 2%. That's a very, very big drop, and that's pretty much been the case for all 3 days this week. So as of right now, the Nasdaq is currently down 5% this week. For the Nasdaq to drop 5% in 3 days is very, very unusual. It's a mixture of a lot of different things. You have inflation, you have people not reacting well to earnings. You just have so many different things that are taking place. You have technicals kind of double topped at around 14,200. You broke some supports. It's getting pretty wild out there. So we'll see what happens. For the first time, like basically the last 2 nights on stream, futures were down like 1% while I was streaming, which has led to the last 2 days being very, very bad. I'm okay to say this right now. I don't want to jinx anything, but for now, futures are actually up tonight, which is a different case than the last 2 nights. The last 2 nights while I was streaming, futures were dropping like crazy. And for now, futures are up. They're not up like crazy, but they're up an okay amount. NASDAQ futures are up 0.40%. S&P futures are up about 1/3%. That really does not recover much from what they dropped today, but at least they're not bleeding again overnight for now. Of course, that can literally change within minutes, but hopefully they stay overnight. I'm obviously going to give you a much more in-depth breakdown on the market. I'm probably going to spend like 15 minutes talking about the indices and everything, so we do have a lot to cover. Bitcoin's hanging out around 50K right now. Let's just get it started. Let's talk about the indices. So I'm going to start off with talking about the short term, which by short term, I just mean probably the rest of this week, maybe the beginning of next week. And then after I talk about my short-term thoughts on the market, I'm going to talk about my long-term thoughts. And most of this is going to be technical based, but please keep in mind that there's a lot of things going on fundamentally. And I think more numbers are coming out tomorrow, if I'm not mistaken. So yeah, let's kind of talk about it. Let's start off with the S&P 500. Okay. We come over here. You broke the first support, and if you're in the Discord, I shared this yesterday afternoon in the Discord. I shared this bearish pattern that you had on the 1 hour chart. This is a right angled ascending broadening formation. You broke the support of this today, and as soon as you broke that support, I knew it was, all right, you're going down to the next support, and you did. So you bled more on the S&P, and you came down to the next support area, and you held it for a couple hours. You even had a nice little bounce, but then you eventually, within like the last half an hour of the day, continued to bleed down, and you actually closed under. So you did close under support on the S&P 500. There is literally no support where you are right now. The next area of support would be the gap fill at 4,020, which I think is about another 1% to the downside from where the market closed. Yep. So just to get to the next support, you have another 1% of risk. However, maybe you don't. Maybe you just randomly bounce here because futures are up overnight, and then you can get back above 4,068, which is literally only 5 points away, and then you're back in the support range. So really, here's the deal. If futures stay like this overnight and we have a okay bounce in the morning and we move up a little bit to start things off, you want to hold above 40.68. That's the level you're looking for to hold above intraday. If regardless of what futures do, if the market starts off bad tomorrow, you're probably going to go down another percent to 4,020 because there's literally nothing holding you back from doing that. So that's really all there is to talk about on the S&P if we're looking at the low time frames. If we move up to the daily, not too much to talk about here. You broke the 4,118 support. If you watched last night's stream, I talked about how important that was, and you broke under it. So like I said last night on stream, if you break under that support, you have quite a bit more room to the downside, and that's what happened. You broke it and you fell quite a bit more. In terms of candles, just a big fat red candle. It's not like a bearish engulfing or anything, but it's not a pretty candle to say the least. And you're not at the top of the wedge anymore, but you're still in the upper half of this wedge. I'd say the upper half of the wedge would look something kind of like this. Anything above this is the upper half, this is the lower half. So it's either you reclaim 4068 tomorrow on the S&P 500, or you have a gap down, or you have a gap to fill to the downside at 4020. That's really the scenario for tomorrow. We'll see what happens. Futures are doing all right for right now. You look at the NASDAQ, you filled the final gap that you need to fill. I mean, there are more gaps to the downside, but they're like way, way lower. Like, I think the next gap is another 5% lower. So you'd have to pretty much double what you've already done this week to fill that, which honestly, I doubt that will happen unless there's like a really big bearish catalyst. But doesn't mean you can't keep going lower. I mean, I think the QQQ has more gaps to fill. If we go over there, you have another gap that's barely even under you. So if you have a red open tomorrow, you're probably going to fill 4020 on the S&P 500, and you're probably going to fill 315 on the QQQ, which is another gap. You're probably going to fill those gaps, and I hope that you can find support there. If you can't, then you're probably going to keep heading down to the next support numbers. All right. So just to finish off the NASDAQ, not much of a pattern or any divergence. You just went to a gap fill, and then you kind of stopped dumping. You didn't really bounce, but you just stopped dumping for the final hour of the day or so. You were kind of just flat, even though the S&P kept dropping. And then the Russell 2000. This is the only one where there's like something on the chart to talk about, but at the same time, like, I really don't know how much this matters with everything that's going on fundamentally. Like I always say, technicals don't hold the same weight when people are not trading like they usually do. Technicals work best when people are trading normally, because technicals use the data of normal traders to try and anticipate the future with probability. But when people are not trading like normal traders and they're panic selling, or they're even FOMO buying, technicals don't work out with the same probability. And that's just how the research has been done. But you are at the pattern completion zone of a bullish Gartley on the Russell 2000. You could even see it on the 4-hour, so it's a pretty real pattern. It's just like, one, I don't know how much it will matter with everything going on, and then two, you don't have any like divergence or anything to help you out. You are actually at a support. This 211.90 level was your low on March 24th, on March 4th, kind of on February 3rd, and it was your high on January 13th. So if we have a good open tomorrow, I might be looking at IWM calls only if we bounce off this level. If we break right under this level, which literally all you need to do is fall down like half a buck, then I'm not going to be touching it. I'm just going to let it do whatever it wants to. But if you actually start bouncing at this pattern completion zone, I might place some IWM calls. We had a really good IWM call trade last week for the premium members. They ran like 100%. It was a pretty similar thing to this, except you were playing a channel. But again, we need to wait for confirmation, and we will not get that until the market opens. So I have no clue. And I think really the highlight of the day in terms of what really was, I'm going to say, not concerning, but just like the big mover was the volatility index. It went up 26%. And there's actually something really interesting I want to talk about here. And I'm spending a lot of time talking about the market and not talking about individual stocks, because most stocks are just trading the same. Most stocks this week are just dumping, right? They're all just following what the indices are doing because the indices follow the stocks. It kind of works both ways. And stocks tend to be a lot more correlated to each other when you are either in super bullish conditions or super bearish conditions. Usually when you're like in neutral conditions is when stocks are very picky. But when you are like going straight up or straight down, usually most stocks do the same thing. That's why you go straight up or straight down on the indices, right? But just for the newer traders. So the volatility index broke over the 200-day moving average. And what have I been saying for like 2 weeks? And I've been showing this on stream every single night. I've been saying you don't want to get above 19.6. You don't want to get above 19.6. Well, you actually got above 19.6 yesterday. And that was like your confirmed breakout on the volatility index, and you got the follow through today with a huge move. So here is, I'm not going to say good news, but I'm just going to say something to think about, just some context. All right, let's go out to the weekly. You are now approaching your first area of resistance on the volatility index. If we zoom on the weekly, and I know it's very volatile, it's the volatility index, there's a lot of like ups and downs, but you can see in this first like green box between pretty much 28 and 33 is where you have actually pulled back quite a few times, a little bit over here, a little bit over here, once over here, kind of over here. So you're approaching that first pullback area for the volatility index, which if the volatility index does pull back, I think stocks will be able to bounce because it's kind of a lagging indicator to the S&P. And another thing that I really want to talk about on the volatility index is that yes, it has had its highest close since, I need to go back to the daily actually. It's had the highest close since March 4th. Now this is very, very important, okay? The volatility index has not closed at this level since March 4th. It's the highest close. It's been at the highest price. Why is this so important? March 4th is when the S&P was at the bottom of the broadening wedge, okay? So this blue line, that was the last time you closed in these areas for the volatility index. If we go over to the S&P 500, I'll put another blue line just so you can see it. All right, right over here. So the last time that the volatility index closed around this level, you were bottoming out on the S&P 500. Okay, so if we're only, and that's only one sample, that's a very small sample size. We only have one previous thing that we're looking at. But all I'm saying, use this how you want to. I'm not being like, oh my gosh, now tomorrow we're going to go up like crazy. I hope we do, but I don't know. All I'm saying is the last time the VIX was here is when the market actually reversed to the upside after dropping for about 2 weeks. And we've only been dropping for about like 3 or 4 days. So we'll see if this matters at all. What I'd love to see tomorrow, the most optimal scenario, I'm going to tell you, and I'm going to tell you also, I'm just going to give you all the scenarios for tomorrow, just so that when you see all the things happening, you kind of get an idea of what's going on, all right? So I'm going to give you my perfect scenario. What I want to see is right away, I want to see the VIX pull back at this beginning of the resistance zone. First thing I'm looking at tomorrow, I want to see the VIX have a pullback right at the open, okay? What else am I looking at? I want to see the IWM bounce right at the open because it's at the PCZ of a cipher. What else do I want to see? The NASDAQ. I'm not too concerned with how the NASDAQ does tomorrow. I think it's still really, it could go either way. On one hand, on the NASDAQ, kind of looks like a double top. You have bearish divergence on the weekly. You have a super bearish candle on the monthly, I believe. But the monthly candle hasn't closed yet. It could always run back up. The NASDAQ, the long-term technicals on the NASDAQ look bearish. The short-term technicals look neutral, all right? So I'm not too concerned with that. And then on the S&P, what I want to see is if we have a good open, I want to see us get right back above 4,068. If we have a bad, all right, so that's like the most optimal scenario. VIX pulls back, IWM jumps right at the close. I don't care about what the NASDAQ does that much. And then I want to see the S&P go over 4068. If play that back in the morning, if that happens, I think we can get a nice bounce day tomorrow. But obviously we need to hold the levels. What's the other scenario? Futures are up right now. Let's say futures completely turn around overnight and you gap down a little bit in the morning, or you just start dropping at the open. This is the second most optimal scenario. So I'm giving you the two optimal scenarios. I just told you the first one where basically the VIX pulls back and then the indices bounce right away at the levels I want them to. That's like optimal, the most optimal scenario. The second, I'm not going to say optimal, but okay scenario is let's say we get another pullback at the open and the S&P starts dropping and we drop 1% on the S&P. I really want to see a bounce off of the gap fill level. Gaps have acted like support and resistance on the S&P so many times in the past few months. If we get down to 40.20, I want to see a bounce off of it really, really badly. If we fall under that gap fill and just keep dropping, then you have another like, let's see. You have another like, why is percent not working? You have another 1% room to the downside. So if you don't hold the gap fill, then you could fall another 2% just to get to the next support in total. So this is like scenario number 2 where we have a bad open. I want to see us bounce off 40.20. I want to see the NASDAQ. I don't know how much the NASDAQ would drop if we have a bad open, but I want to make sure that first 4-hour candle closes above 13,000. I do not want to see the 4-hour candle in NASDAQ close below 13,000. If that happens, you're pretty much talking about like a double top. And that's how bull markets can end, We're not even close to ending this bull market. Please, I'm not saying that you are so high up that even if you fall another 5-10%, you're not even close to jeopardizing this whole entire bull market, but obviously it would suck for the short term. And then the Russell, if you don't bounce right away on the Russell, let's see. Probably I'd want to see a bounce at 208, which was your lows from March 25th, and it was also your low on January 15th. All right, so just to summarize, if we have a good open tomorrow, I want to see the VIX pull back, I want to see the S&P get over 4068, and I want to see the Russell just start shooting up. If we have a bad open tomorrow, I want to see the S&P bounce off 4020, I want to see the NASDAQ hold 13K, and I want to see the IWM hold 208. All right, so if you want to clip that little part, play it back tomorrow morning, depending on what happens, those are levels I'm looking at. If you don't hold those levels, it's bad. I mean, things are going to be very bad. It's kind of obvious, because at that point, there's so much more room to the downside. So it's like you either reverse at the levels I just talked about, or like who knows what this can really turn into. Even though it already feels like it's been so much, in the grand scheme of things, it's really been nothing. I mean, if we look at the S&P 500 on the monthly, this has literally just been like nothing at all. So short term, I'm looking at those two scenarios for a bounce, either tomorrow or maybe on Friday. Long term, I'm still not sure. You're still in the upper half of this wedge. The NASDAQ looks super ugly on the monthly. It's hard to, there's no bullish technicals long term at these levels, except for the trend, which is obviously bullish. You're making higher highs and higher lows. Other than that, you have bearish divergence everywhere. You have bearish candles. You have bearish patterns. So the high time frames are not looking good. The low time frames, if we use the levels well tomorrow, we can get a nice relief rally. And that's what I'm looking at. So hopefully that gives you some sort of info. I talked about all the indices, and I talked about the VIX. I also want to talk about the 10-year yields. Can you be surprised that the 10-year yields are going up? Have I not been saying for the past week that they're so bullish? I've been showing you the same exact chart every single night on stream. You broke out of the wedge, you had hidden bullish divergence, you put in a bullish hammer candle. Can you be surprised that the 10-year yields went up? No, it's been implied for multiple days now. Like literally it's been implied since the beginning of the month almost. If we look at the dollar, it's starting to show classic bullish divergence. And I want to talk about the dollar for a second. So here's the thing. I was talking about it with some people in Discord earlier. So there's obviously a lot of scares with inflation. I went on Google search results or whatever, and a lot of people are looking up how to trade inflation, which is a little bit scary. But here's the thing. If we are going to get inflation and the market keeps dropping, you'd assume that people are going to be selling to go into cash, which would be good for the dollar. Typically when the dollar goes up, equities go down. But the other thing is, like, if we're getting inflation, then wouldn't the dollar have less worth? So I'm really, I don't know if I want to trade the dollar or not, just because, like, fundamentally, with all the money printing and everything going on, I don't think the dollar's in the best place right now fundamentally. But as a hedge for the market, maybe it could be a good way, because people will be selling into cash. So it's kind of like contradicting. I'm not the best. I'm good at charts. I'm not really that good at economics. I mean, I took one economic class, maybe two. So somebody who has more expertise in that maybe can help me out there. But we'll just see what happens. The charts always speak the truth. So they don't always imply the truth, but they always tell you what did happen, and we will see what will happen, if that makes sense. And that's really all I wanted to talk about in terms of the market. Futures are continuing to go up. The NASDAQ futures are now up about 0.5%. S&P futures are now up 0.40%. So for right now, futures are giving us a good signal. Hopefully, if they can stay like this overnight, we can get that optimal scenario tomorrow, which I just talked about. And we'll see. All right. So in terms of just some more coverage on what happened today, last night I spent about the first 20 minutes talking about confirmation on stocks, and I'm going to go over that again. My thesis going into today for the market didn't really play out, but at the same time it was pretty neutral. So basically, if you watched last night's stream, what I pretty much said was I was looking for, if I go to the S&P 500, I was looking for either us to hold this 4,118 level. Let me just move that over. What I said last night on the stream was either I want to hold this level. If we don't hold it, I want to bounce off this level. I knew right away, based on the price action I saw at the open, that we were going to break this support. I even said it to the premium members that the S&P was being very, very weird early in the morning. It was pretty obvious I was going to break it. So I was fine with that level breaking because that was also a bearish pattern, the right angle descending broadening formation. So I was fine with it breaking this first level. Here's where my thesis was wrong. And again, I wasn't like super hell bent on it bouncing here. I just thought that it was an area where you could see a bounce. And you didn't. I mean, you did for a little bit. If we really go down to the low time frames, come out over here. Right when you were right over here, I was getting pretty bullish intraday. Because you had some divergence. The VIX was pulling back a little bit. You had like a mini falling wedge on like the 5-minute chart. And what happened was you got this bounce right over here. So how much did it bounce? So it bounced up about 0.5%, which is a good intraday move. But then that happened within half an hour. You went up 0.5%, and immediately in one candle, like very, very quickly, you gave up those gains. And the second that happened, I was pretty, I don't know the word to use, like gutted about it. Like it was looking so good for a reversal off of the same zone that it used to be trading in back in April and beginning of April. It was looking so nice. I was finally thinking that we could get a nice good old bounce, which we did for like half an hour. And then boom, like right away, the sellers just, I guess, maybe took profits on the bounce or cut their losses most likely. And then you kept going lower. And that was the one part today that I did not anticipate. I definitely was super bearish from right over here to right over here. I did not touch anything. I just let the market do its thing. I just sat back and just watched it drop because it was so easy that it would go from support to the next support. But over here, I was definitely hoping for more of a bounce, which we didn't get. So again, we can easily reclaim this level if futures stay like this overnight, but we'll have to see. And yeah, the other thing, so that was just what I said about the S&P going into today. So the first half of it was right. I said if we break this, we're probably going to drop a lot more. That part about what I saw last night did play out, but we did not hold the next level of support. So I was like 50-50 on my thesis going into today. And then the other thing I talked about last night was confirmation. We had a very nice bounce on a lot of growth stocks yesterday, and I spent a good 10-15 minutes talking about how a lot of them have really good looking charts and how I was looking for confirmation on them today. Even though the market pulled back a lot today, we actually got a lot of confirmation. I'm going to show you specific examples. Fisker is a great example. I'm going to show you specific examples of what I was talking about last night. I did not think that these would actually be able to confirm because the NASDAQ and the S&P were down 2%. But a lot of growth stocks did hold up decent today. They still dropped, but not that bad compared to a lot of large caps and things like that. So we're going to talk about that in the next segment. And yeah, I'm going to talk about how we can look for confirmation, because here's the thing. The S&P and the NASDAQ still have bearish technicals for the long term. Not for the long. By long term, I don't mean we're going to enter a bear market. By long term, I just mean on the high time frames like the weekly and the monthly, you have bearish candles and bearish divergence. That's what I mean. So I'm talking about maybe we could have a couple rough months for large caps and tech, because most of the indices represent large caps and tech. A large part of the S&P is tech, and then pretty much all the NASDAQ is tech. Even the Russell has some tech in it, but obviously more small caps. So that's really not great. But here's the thing. What's been happening the last 2 months? The S&P, the Dow Jones, the NASDAQ, not the Russell, but the S&P, Dow Jones, and NASDAQ have been going to new all-time highs. They've been pumping. Large cap and tech have been doing pretty well for the last couple of months up until the last week of April. In the last week of April, we had a lot of earnings. A lot of large cap tech stocks had huge beats on earnings, but they actually had bad reactions. They had like pretty much sell the news because they were running up until the earnings. And then when we got the confirmation that earnings were good, they actually just started dropping, which was strange, but welcome to stocks. So, and while those large cap tech stocks were running, all these growth stocks and small caps, even some mid caps like pot stocks and EVs and SPACs, they've been dumping. They've literally been crashing for 2 months. They've been in a bear market. So while the indices have been in a bull market, a lot of these small caps have been in a hardcore bear market. where they've lost more than half of their value. I don't know if I'm lagging right now. Hopefully I'm not, but they lost a lot of value. And now we're in a scenario where I'm hoping that they can start bouncing because they're showing bullish reversal technical signals. The only thing is, what you need to see is, even if the S&P and the NASDAQ drop, you need to start seeing EVs and pot stocks and growth stocks saying, I don't care. If you want to drop S&P, if you want to drop NASDAQ, I'm still going to go up. That's what I want to see. I want to see the small caps and the growth continue to go against the market. For the last 2 months, small caps and growth have gone against the market. While the market was going up, they were going down. So now what I want to see is, I want to see them go up while the market goes down. But we aren't really getting that yet, which is why it's hard to be super bullish for now, because they still are following like the dump. They're still pulling back with the S&P and the NASDAQ. So really the area that we're in is the indices are really just, I'm not too sure about, but a lot of growth stocks look really, really bullish. They're showing harmonics, they're showing divergence, they're showing supports, they're showing candles, they're showing patterns like double bottoms. They look so good, but they're just not really taking off because the NASDAQ and the S&P and the Russell keep dumping every day. The large caps are just selling off, which people see the indices doing bad and they want to go sell their small caps. So it's like, we're in a tough spot. So really, again, like I said last night, we're looking for confirmation. We're looking for these small caps and these growth stocks to start going up and making decent bounces, even if the market's dropping. Like, and by the market, I mean the S&P and the NASDAQ and the large cap indices. We need to see small caps do better than large caps. We need to see rotation, right? Because when money gets taken out of large cap stocks, it has to go somewhere. It could be crypto, it could be metals, it could just be cash, or it could be small caps and growth, which have been dumping for months. So now that people are finally pulling out of large caps and tech, hey, what if they want to put their money into growth stocks that have lost more than half of their value in the last 2 months? That's what I'm hoping for. That's the most optimal scenario. And a lot of things are getting close to confirming that. One of them is Fisker, which I'm about to talk about next. But how do we confirm that they're actually going to start going against the market? Well, the simple way to put it is they need to start going up, even if the market's not doing too well. And then the other part is they need to hold their lows. And that is actually what Fisker did today. All right. So Fisker is actually a pretty good example of something that is not confirmed yet, but it's starting to hold up. All right. Fisker's obviously been in a terrible downtrend. It's not out of its downtrend. It's not making higher lows and higher highs yet. It's still putting in lower lows and lower highs. But look at this. Yesterday on Fisker, you had a huge bounce. Basically, if you remember yesterday morning, you had a gap down in the market, but a lot of growth stocks ran right back up and filled their gaps. Fisker was one of them. And what I said last night, after these big green candles came in on growth stocks yesterday, I said what you want to see today is you want to make sure they don't fall under their lows from yesterday, if that makes sense. Right? So all we had yesterday was this green candle right over here. And I said what you want to see tomorrow is you don't want to fall under the lowest part of this green candle. Fisker did not do that. Even though the market dumped again, Fisker did not dump as much as it did yesterday. It pulled back 3 or 4%. It didn't pull back, from $10 to like $9.30 pre-market, which is what it did yesterday, or $11. And that's what you're looking for. And again, we want to see this happen again tomorrow. All you need to see on these growth stocks is that they cannot take out their lows from yesterday morning, right? Where everything pretty much gapped down, not everything, but a lot of stocks gapped down yesterday morning. Those gap downs where they opened up right over here, all you need to get for confirmation on growth stocks is they cannot fall under May 11th's candle open, okay? So all you need to think about when you're looking at these growth stocks that have bullish technicals, you need to make sure that their current price is not under May 11th's candle open, all right? Print that in your head. That's what you're looking for. Fisker, I put out an alert today, and it went a little bit lower while the market was falling, but it closed right around where I put out the entry. So what's up with Fisker? Let's actually talk about the technicals right now. Your classic bullish divergence on the daily is finally developing. It only takes a couple good days for this to confirm. That makes me excited. Okay. And you have the RSI divergence. You have 4-hour divergence. Let me chart it for you. you have bullish divergence on every single time scale in Fisker, which is awesome. All right, you even have a 1 hour divergence on the MACD and the RSI. So Fisker, why did I put out a trade? Because you bounced at the pattern completion zone of a bullish butterfly, and you have classic bullish divergence on every time frame, and you held above yesterday's low. This is pretty much the same exact thing that happened back over here. And what happened after that? You went up 150+%, I think. Let's just make sure. Yeah, you went up 166%. This is the same exact pattern, and actually it's a much larger pattern, which means it holds more probability. The only difference from that pattern and this pattern is the sentiment is very different, right? Back over here, EVs were very, very hot. Now EVs have been dumping for 2 months. So this is a reversal trade. You're hoping that the trend reverses, which is not an easy thing to happen because there's a lot of bag holders who want to sell every single pop to cut their loss. But with enough bounces, eventually you get the bag holders out, you get float rotation, and then hopefully you can get some continuation money, which Fisker has had a few bounces, but none of them have seen major continuation for more than like 10-15%. This was like the biggest bounce. And that's what I'm looking at in Fisker. Earnings are, I believe, on Monday, if I'm not mistaken. But I mean, I don't know. I guess we'll see what happens. I don't think it should matter that much, just because everybody knows that they don't have much earnings to report. Their vehicles are not out yet, but at the same time, they're going to have a call, so they could say something good, they could say something bad. Who knows? So we'll see what happens there. And this is just a good example of what you want to see on your growth stocks. You want to see the bullish candles, the bullish divergence, the bullish harmonics, and a lot of growth stocks are showing this, but you need to get the confirmation. So why are all of these patterns appearing? Because things are getting oversold and there's value. These patterns appear time and time again in the market because it represents the psychology of traders. When these patterns appear, it means that people think that it can go up soon and that it's getting oversold and that the sellers are getting exhausted. That is what these patterns represent. And many growth stocks are showing this. The last time I remember all these growth stocks showing major harmonics and divergence was last October, like right in the beginning of last October. If we go back to the Russell 2000, which is the small cap index, you can see pretty much this was right over here. Okay, so you can see the Russell was pulling back from pretty much all of August. Right over here on this dip in the Russell 2000, the small cap index, so many EVs and pot stocks were showing harmonics and bullish divergence on the daily and bullish candles. And what happened when they did that? When they all were doing that, you had a very parabolic run, right? Pretty much from August until the end of February, you went straight up, and then in February you started chopping around, and you're getting those formations again. So the technicals are indicating that, I'm not saying this is going to happen for sure. Technicals are only probability, and there's so many fundamental things going on, but technicals are implying that we are going to get rotation back into growth, which has been dumping for 2 months, because now people have made so much money in large caps and tech, and they're going to put their money somewhere. Why would they want to put it in the dollar if the dollar is losing value? Maybe they want to put it in growth stocks. I don't know. Maybe they want to put it in metals. But people like to go where the value is, and there's a lot of value in growth right now. I mean, it's kind of weird to say that because I'm not talking about value stocks. I'm talking about growth stocks and speculative stocks. But just the charts are implying it. I'm just telling you what the charts are doing. If it doesn't work out, don't blame me, blame the charts, because they're not always going to work. And that's why you manage your risk. That's how you be a trader. You kind of read these signals from the charts, and then you take a bet. If your bet works out, you try and make as much money as possible. If your bet doesn't work out, you try and lose as little as possible. That's how you trade. It sounds simpler than it is, but it really is the core of trading and swing trading using technicals, probability, and risk management, right? That's how you have longevity in your portfolio, and you don't have 300%, 50% days, right? Like you go up 300%, then you lose 50%. Like you want to really just get little growth over time, which really compounds. You use the probability and you manage your risk. You don't do trades that are 50-50. You don't go all in something. If you really want to have higher highs and higher lows in your portfolio, that's how you do it. In my opinion, that's not financial advice, but most traders will tell you the same thing. right? Look for high probability and look for low risk, high reward opportunities. Okay, so that's Fisker. I put out a different trade today. Pulled back. It was really making a move off of some news, and it started doing pretty well, and then the market flushed again. Like, it was terrible timing. I put it out, it was up like 4%, and then the S&P just started flushing again, and then this pulled back 4%, and it closed the day down 1%. So it was tough. Lost a little bit playing some options on it, but actually today was interesting for me. In the morning, like right off the rip, I got into Viacom calls, which I just show you. So right around the open, I got into Viacom calls. I already had it on my watch list going into today for a day trade. And let's see, where was it? All right, so you see this big move in the morning that Viacom put in, like literally at 9:45, 15 minutes after the market opened. I played this move with options. So I made like 15% profit on like a 2 or 3% move on Viacom because I was in options day trading them. So I started off the day with a pretty nice win. And then right after I took profits on Viacom, and actually the reason I took profits on Viacom, like right away, I took like 15% profits on options, which is not the craziest amount for options. Why did I take my 15%? Because right when it was getting up here, the S&P was breaking under the 41.18 support, right? Right over here, you can see was 9:45 when you started breaking it. So right as Viacom was putting in highs of the day, the S&P was breaking under support, and I took profits on my Viacom calls. If you're a premium member, I shared all of that with you. I told you all when I got in my Viacom calls. I told you why I took profits, because the S&P was breaking support, and that ended up working out because then Viacom like dumped after. It didn't dump, but like based on like the 15-minute chart, it fell a lot. In reality, it only fell like $1, but I was playing options. So I started off the day with a good Viacom trade. What did I do after that? Then I got into UAVS calls. That was my failed trade today. Basically, I just gave back my gains from the Viacom trade. That's what I was risking going into it. I said, I just made a 15% trade on Viacom. If I lose that 15%, the value of that in money, then I'll just break even on the, I still lost the trade, but for like dollar value, I broke even. So then I was flat on the day. I was pretty much mostly cash for my account. So the market pulling back wasn't really affecting me too much. And then I got into Facebook calls, and Facebook put in a very interesting move while the market was dumping. I got into Facebook calls at like 3:01, like right over here, because I was looking at Tradedics and there was like a really, really large call sweep on Facebook. And then I got into Facebook calls, and Facebook went up 1%, and my calls went up like, I got lottos, so I got calls for this Friday. So that's why they went up like crazy, because it was like a low probability of them going up because of the expiration date being so close. But then I got into Facebook calls and they went up like 40%, and I was up like 10% on the day for my portfolio. And I was super happy, and then the last 30 minutes of the day brought me right back down. You can see then Facebook, I held the calls, I didn't take profits on them, and then Facebook pulled back like up 1%. So it went up 1% and then it pulled back. So I went from being up 10% on the day to pretty much just having a flat day. That was my day today. I guess having a flat day, considering that the market pretty much dumped, is I can't complain about. But we'll see what happens tomorrow. And what was I talking about before I got distracted about telling you about my day? I think I already talked about UAVS, but the idea of this trade is that you're double bottoming at the PCZ of a bullish bat. You kind of have the 1618 from B to D. It didn't really get to the 886 from X to D. So you're trying to double bottom there. You were developing the daily classic bullish divergence when I put out the trade, but then it pulled back, and then now you're not developing it for now. But the 4-hour divergence, I think, is still developing. Yeah, the 4-hour classic bullish divergence is still developing. So really this trade, you have a double bottom at the pattern completion zone of a bullish bat with 4-hour classic bullish divergence on the MACD and the RSI at a value area, which has been your support like 3 different times before, 452. So pretty good probability trade. It just it pulled back with the market when the S&P really started flushing. And it was up in the morning because I think there was some news about Pfizer. It's like a drone stock kind of. There was some news about Pfizer delivering vaccines with drones or something. So this was up, and then the other drone stock, BISL, was up a little bit as well. And then they pulled back with the market. So that was the idea of that trade. Just to finish off the trades recap, IPGP, I think I put this on Monday. Still around the entry, not much to talk about. SPG had a rough pullback today. It was looking so good. Technicals looked nice. You had hidden bullish divergence. You were breaking out, and then the market says nope, and it fell back under. So needs to get back above 122 desperately, or it might be a failed trade. PGRE, another one that was breaking out. It was looking good, and then the market said nope, get back under resistance, and it did. So yeah, that kind of recaps everything I wanted to talk about. I know I just spent, what, 45 minutes. Usually I only spend like 15 minutes recapping the day, but it was a pretty eventful day. So hopefully that 40 minutes gave you some of my thoughts, and you can use them however you want, but nothing I said was financial advice. Futures pulled back a little bit. They're still up on the night. Bitcoin is actually moving. Not that much. It's at 51K. It went up $1,000. So we'll see what happens there. And yeah, that was pretty much the recap of a very hectic day. I had 2 coffees today. Usually I only have 1, and I had pre-workout after that. So it was a tiring day for sure. Yeah, make sure to hit that like button. We got to get some more likes. I know on days like this and in seasons like this for growth, the likes are lower, the viewers are lower, the people joining the Discord are lower, the new subscribers, like everything's lower. That's just how it works. You know, I've been through a few of these market pullback, and like pretty much, I mean, it makes sense, right? Because people are less hyped about things, and they just kind of want to not think about stocks at night after having a bad day in the market, which I understand. I honestly feel the same way sometimes, but as a trader, it's kind of like your job to always show up no matter what the price action is, right? If you're only showing up during the good times, then you're just kind of like crying during the bad times. Like, yes, nobody likes losing money, but if you're going to be a trader, you need to understand that you are going to lose money. You just want to make sure that you keep it to a little amount. That's your job, right? So I get it. I feel like a lot of people got into this market, which was just like gains, 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 because it was so easy. I'm not going to say easy, but if you had a good system, a lot of money was on the table for you to make last year after the COVID crash. At the same time, it's been really, really rough for a lot of those hot stocks from last year. They've been dumping for the last 2 months. So I did not expect that. Most people didn't expect that. It's been rough for sure. But good times and bad times, you just got to ride through both of them and make more or optimize how you trade during the good times and minimize your risk during the bad times, right? Let's see what else is in the chat. Should you be doing smaller trades if there's been major pullbacks? Yeah, I mean, I can't tell you like for sure what to do. That's your choice. But if things are not playing out like how they normally did, then yes. If you know what I'm saying, if it's harder to make gains in the market because things are not going up as easily, then yeah, I mean, I think that does make sense. Being more cash heavy is definitely a strategy that many people use. AMC did put in a nice move today. I was looking at it. I actually even charted it. I didn't really do much with it though. Had a little pop, pulled back a little bit. See, I was even thinking about like looking at how to trade it. It's kind of like a neutral pattern, but yeah, I didn't really touch it. I thought it looked all right. Kind of trying to double bottom off of $9. Kind of also in a symmetrical triangle, but I don't know. I usually just don't trade super hyped up stocks. Appreciate that, Scrooge. Yep, all the people who are showing up no matter what happened during the day, you're the real ones. Everybody's a real one, but like you guys are like the real ones. I appreciate your support because obviously how the market does directly affects how the stream does and how the Discord does and my Twitter. It's obviously hand in hand. Okay, so yeah, that recaps everything I wanted to talk about. I think now we can look at ticker requests, so I'll spend the rest of the stream looking at whatever tickers you guys want me to, so drop your tickers in the chat. Nothing I say is financial advice, I'm just giving my opinions, and obviously the market's in a very weird place right now, so technicals don't have the best probability right now. compared to before, or until things cool down a bit, which hopefully can happen soon based on what we talked about. And yeah, don't request things that were up like 10,000% today, which probably wasn't much, but we'll take a look. I keep forgetting that I bring myself tea and then it just gets cold. All right. Yeah, the best learning does come from worst times for sure. So look at DNMR, NEO, charge point. NEO closed under support. I was looking at NEO. So DNMR, it is developing triple classic bullish divergence. It looks like a lot of other growth stocks, or small caps, whatever you want to kind of consider it. A lot of growth stocks and small caps have made very big retraces in the last couple months, which have allowed them to make harmonic patterns and show classic bullish divergence. And it's like so many stocks look like this. They have a harmonic, they have classic bullish divergence, they're approaching support areas, but there's two things that are kind of in the way. One is obviously the market, which is still pulling. And then two, a lot of like growth stocks and small caps have earnings this week or next week. Like literally my whole entire watch list of things that have good looking technicals all have earnings like within the next few days. So I need to wait till like after the earnings to put out trades, because I don't trade around earnings. It kind of defeats the purpose of technicals. But this one, I mean, I guess you could say it's at the 1618 from B to D, but it's like it definitely is an XABCD. You could probably look at it as a couple different ways. You could look at it kind of like a crab. I wouldn't say Gartley. I mean, it passed 786, so earnings are according to TradingView on the 17th. That matters more than the technicals, and I don't see much of a historical support here. Kind of like straight up and then straight down. NEO, the important level is 34. You can easily get back above it if the market has a good day tomorrow, or if NEO bounces tomorrow. If you don't get back above 34, I'm not sure though, because you bounced off of it 1, 2, 3 times, and now you broke under it today. So you need to get back above 34. Until you do that, there's like not much else to talk about. There's not much of a pattern or any divergence. That's even like the PCZ of a bullish cipher. So that's like a very important level. Charge point, it's as long as you're above 1923, it's fine. I think we looked at this a couple nights ago, and basically what I said was like, yeah, you're above 1923, but you have quite a bit of room to get back down to your support, and you still do. So you're still a decent amount above your support, but as long as you're above it, you're fine, if that makes sense. So how you manage your risk is really up to your tolerance. Other than that support, I don't see much of a pattern or any divergence. So yeah, that's charge point. LI is something I've been looking at as well. Another name that has pretty interesting technicals, but earnings, I think maybe I think earnings are the 13th on LI. It's been on my watch list. No, earnings are in June, so you actually have a while until earnings. So let me delete this. That did not work out. Never put it, let's see. So at this point, you're still in like a descending broadening wedge on LI. You still are showing potential classic bullish divergence on the daily like most other EVs. But I would like to see it get back above 1860, which was your support right over here in kind of towards the end of April, and it was your resistance back in September of last year. That's an important level. You actually pulled back when you tested that level today. So you want to get back above 1859, get your MACD to go back to green. And if you can break out of this pattern, and who knows? I mean, your next major resistance is, yeah, $27, which is way above the current price, but you have a lot of work to do before you can really talk about that. Tattooed Chef had earnings today. It was down 4% after hours. Let me see the price it was at. 16.45. So it pretty much came back down to the support after hours. Wow. If you can actually hold above 1650 tomorrow, Tattooed Chef is very interesting. You have a bullish bat. It already reversed one time at the PCC. Now it's trying to put in a confirmation low and a double bottom. All you need to do is hold above 1650. If you can do that on TTCF, I like it. You even have bullish convergence where both the price and the MACD and the RSI made higher lows on the 4 hour. But it depends on how people react to the earnings, so we'll see. Palantir, I think looks really interesting. It was oversold for the first time ever on the RSI. And you pretty much bounced at the PCZ of a bullish crab. You're also around the demand line of a descending wedge or a falling wedge. So really, as long as you hold, like I've been saying on all these stocks, as long as you can hold above yesterday's lows, I think it looks good based on technicals. But again, the market needs to, or the growth market and the SPAC, post-SPAC market needs to start doing things instead of dumping. That's what needs to happen. PSTH, yeah, I was looking at this one yesterday, wasn't too sure about it, and then I think some news came out. I believe this is Ackman's SPAC, and he said something about like they're getting close to a deal. I might be confusing this with something else, but I think this is the one, PSTH. So it had a very big move today. It was about 8%. Kind of topped out at this like supply line. It's interesting. You have kind of like a triple bottom and just like a little supply line you created. All you need to do is break above the supply line before you fall under 2263. You can do that. And these are all of your targets, all the Fibonacci levels. So that's PSTH. I mean, nice, very big volume today on that news, but we'll see how it continues to go. Other than that, there's not much to talk about here. I don't really see any divergence or anything on the 4 hour. On the daily, maybe you could call this divergence, one little candle wick. It depends on how you look at it, but we'll see. What's up, Cheddar Freeze? How you doing? Yeah, crypto trades. One of the crypto trades I broke even. I put out like a break even before it fell, and the other one went down to the stop. It was like a 6% loss, FIL, and then it really dumped after hitting the stop loss. What else we got here? So PSTH, thank you for dropping the link, Cheddar Freeze. Seems that during this time in the market, earnings are not playing into things exactly. I mean, ever since like the major tech week, where we had like Tesla and Apple and Microsoft and Facebook. Facebook did go up after earnings, but a lot of like the big names had really good earnings, even Alphabet, and people said, okay, we knew they were going to have good earnings, and then they just went down. So even a lot of like small caps have been having all right earnings, but they haven't really been doing too well. There were, I think Sonos had a huge move on earnings today after the close. Let's see. Sonos went up 15% after hours on earnings. Then also, yeah, Fubo yesterday went up like crazy. It was actually up a little bit and then it fell back. It was a little bit volatile today, but what else we got here? I'll type those tickers in a second. How you doing, Neutron Flux Labs? Yeah, the real ones show up every single night. That's what a trader does. Whatever happens in the market happens, but your job as a trader is to always show up, right? Even if you're not trading, just to know what's going on. Yep, the interview we spoke about PSTH. What else? I think Scrooge put in OPTT. We'll take a look. Eventually you can get classic bullish divergence, but it needs to start developing. Looks like a lot of other things. I mean, like so many growth in small caps and EVs and pod stocks look like this, where they've been dumping for months and now they're showing harmonics and divergence. Most of them look a little bit better than this, I'm not gonna lie. Like they're already developing their divergence and they're already at the PCZs, at supports. But let's try and chart it and see what we have. So could this be a bat? Yeah, this is a bullish bat. So you have a bullish harmonic pattern, pretty much bounced at the PCZ, the 886, got pretty close to it. And then today you pull back, just like most of these types of stocks had a nice, like so many stocks, gap down at the open gap down at the open yesterday, and they had huge bounces intraday, filled their gaps, and then kind of closed there. And then today they pulled back, but like they had an inside day, which means they traded within yesterday's candle, as you can see. They didn't really go too much higher. They didn't fall below yesterday's low. They just had an inside day, which is fine. And that's kind of what Fisker did as well. So, I mean, it's better to do this than to dump with the S&P and the NASDAQ. So, other than the pattern completion zone, I don't really see much of a historical support. I guess you have one at, oh, all right, so at 182, which is where you already kind of bottomed out at. Why did you, look at this. 182 was your pattern completion zone, and it was also a historical area. You can see all the way back over here in 2019 summer, you actually found support here. So that's kind of like an ice line. It's not the strongest one, but it was there. If you can hold above 182, I guess it's fine. You just need to hold above yesterday's low. Have a good one, Barasan. I'm sorry if I mispronounced that. Appreciate all the link drops. Cheddar Freeze. Yeah, paper trading's huge if you want to learn. Even if you just want to test out strategies. Twitter, I need to start using Twitter more. I kind of took I'm not going to say a break, but I've been less active. Today I was pretty active on Twitter, but for the past like month or so, I haven't been tweeting out that much compared to how much I used. I used to sit on Twitter all day. If you remember back in like December and January, I would just tweet. But then when we made the Discord, I kind of just prefer, now I talk in the Discord all day. So like before we made the Discord and before like the Discord started growing, I would just tweet on Twitter. That's where you tweet. But I would be on Twitter like all day just tweeting. But now I got the Discord, so it's like not only is it more organized than Twitter, but also it's like I'm not just tweeting for random people. I'm tweeting for people who want to know what I have to talk about and who want to also I want to know what they want to talk about because we're all in the same community. So that's why I spend most of my time messaging in Discord now, not too much on Twitter. I just put like the more important stuff on Twitter, you know, like trades and market analysis and my stream links and stuff like that now. But yeah, I kind of feel like lately it's just been, I feel like I'm missing something, if that makes sense. Like the growth was really good in December, January, February, and then in March when all of these stocks started dumping, obviously the growth slowed down with like the growth of my channel and my Twitter slowed down with the growth of growth stocks. Does that make sense? But I don't know, I feel like I'm missing something. Like I want to be streaming more. I want to tweet more, but like I don't know what to talk about and I don't know what to tweet. Does that make sense? Like I have the time now that college is over, I have the time to be, you know, putting out more content. I just don't know what content to put out. It's kind of like a creative block, if that makes sense, right? I don't know what videos to make. I don't know what stream, like during the streams, like I have time to stream for 2-3 hours a night. But after I cover the market and after we go over tickers, it's like, what else do I do? And even on Twitter, it's like I can tweet about trades in the market, but other than that, I try and put out some jokes and stuff. The Discord is in the description if you want to join it. The link's there. I don't know, but hopefully I figure something out. What else we got here? Marketing, yup. Discord's where it's at. Yup. One-on-one, I probably should open one-on-one classes soon. No, I don't trade. I'm not talking about like how I trade. I'm completely fine with how I trade. My system works for me. I'm just talking about the content I make. I don't have any issues with I don't have a trading block. I have like a creative block, if that makes sense. Like honestly, recently swings have been really tough in these conditions, but I've been making some nice day trades. If you're a premium member, I've been sharing most of my day trades. Some of them, by the time I get in, they just go up right away and I can't really share it. That's what happened with Facebook today. I got in Facebook calls and like literally 3 seconds later, they were up 15%. So I couldn't really share it with everybody else after that. And they ended up running like 40%, which I didn't take profits on. But yeah, I share pretty much all of my personal positions with Premium, unless it takes off the second I get in, which happened like twice today. And then I gave back some gains because I didn't take profits, so I thought the market would bounce. But welcome to trading. But yeah, the options trades have been nice last week and this week. We've had a lot of good options trades, but the swing trades have been like the worst they've ever been. So it sucks. You know, I'm actually, I don't know if I want to say it. Never mind. Never mind. Is that a big harmonic on the Nasdaq starting 325? I don't think so, because you wouldn't have made a deep enough retrace on B. I actually tried to chart this out, but look at this. Maybe you could call it like an alternate bat because you didn't make the 382, but I think the alternate bat could be anywhere between 0 and the 382. It shouldn't exceed the 382, but then you made the higher high. I don't know if this is anything formal. If it is, let me know. I can't think of it off the top of my head. It's not like a regular bat because you made a higher high on the C point. I'm not sure if you can make a higher high on an alternate bat. Let me just look it up. I know it's not a regular bat for sure. I actually did chart this earlier. Let's see. No, I think you're still supposed to make a lower high on the C point for the alternate bat. And it can't really be a cipher because it's under, the B point is too shallow. Can it be a shark? I don't even know if it can be a shark either. Let's see. I know we got some harmonic pros in here. Definitely cannot be a cipher with the B point right there. And maybe it could be a shark, close to a shark. Let's see. So I don't think the B point matters that much on a bullish shark. It's just really all the other points that matter. So I guess it could be a shark if you got to the 886, which is a little bit lower. But still, I like to always have the B point a little bit around that 382 at least, just because it gives more validity, in my opinion, when you have real Fibonacci sequence numbers, you know, within your harmonic. Like, yes, harmonics can be within their ranges, even if they're not at like Fibonacci sequences, but you always want to see like you want to see these numbers on your harmonics, right? These are the high probability Fibonacci sequences. The 236, the 382, the 50% is not Fibonacci, that's Dow theory, but the 618, the 786, the 886, kind of, it's more used for harmonics, not regular Fibonacci. You actually have to manually input that into TradingView. But you always prefer to see like those 1618, the golden ratios, and the 786s, and the more valid numbers, regardless of if it is within the ranges. If that makes sense. Working on my PhD in options right now. We should chat later about what I've heard on a voice, but yeah, thinking about playing both sides. I'm not sure if you're talking to me or somebody in the chat. Shark A to D. Yeah, so it could be shark at the 886 if I'm not mistaken, because I don't think the B point matters on a shark. But I don't know. I don't really use sharks that much. I use pretty much everything but the shark. Sometimes I'll chart a shark, but that sounds weird to say. Chart a shark. How did you learn to read charts so well? Mitch Ray. I mean, I read a lot of books. I went to a lot of websites. I did put in a lot of other learnings. But what really inspired me the most was watching Mitch Ray's stream on YouTube. That's really where it all started and where a majority of what I've learned has come from. But I also have used other resources like Bulkowski's books, Japanese Candlesticks by, I keep forgetting the author of Japanese Candlesticks. I always forget his name. Let me think. I could just look it up. I always remember it when I see it, but I can't think of it. Steve Neeson, yeah, legend. So Bulkowski, I've learned a lot from. I'm talking about, so in technicals, there's really like 7 or 8 people who really put in the majority of these findings. Bulkowski, Scott Carney, Gartley. Can't think about the top of my, like, it's hard to think about when I'm like on the spot, but Wyckoff, who else? What's his name? The psychology, Mark Douglas. Like there's a lot of people that you should definitely look into. I think I shared it in the Discord in the education channel, like all the people that I used to learn from. Let me see. So I already talked about Bukowski, I talked about Carney, I talked about Gartley, I talked about Douglas, I talked about Neeson. So I pretty much said a lot of them. I didn't talk about Elliott because I really am not that familiar with the Elliott wave theory. Charles Dow is another big one. But yeah, all of those people, like just for an example, Thomas Bukowski created a lot of the patterns that we use, like falling wedges and cup and handles. Scott Carney created a lot of the harmonics that we use, like the bat and many others. Mark Douglas is like a very big trading psychology teacher. You should search up Mark Douglas on YouTube. He has a lot of like lectures on YouTube. Steve Neeson, expert of Japanese candles and candlesticks. Robert Wyckoff, he's very, very volatile with the research he did, but he talked a lot about the composite operator, which is my favorite learning from him. And then Mitch Ray kind of put all of their work together. Like he took all those books from, like he didn't take them, but like he learned from all those books that these people put out over the past century. And he developed like a really, really good system. And he kind of refers to it like cake and bake, where he kind of brings all the ingredients together and he makes it one. And I started off with pretty much just using Mitch Ray's system and just learning from him. And that's really where I took most of my, or where I learned most of my method from, a lot of my education from. All of my risk management I pretty much learned from Mitch Ray, like straight up. And then in terms of, this is my trading journey. All right, I started watching Mitch Ray stream just for entertainment, and I just started picking up things like naturally, just because I watched it for hours a day, or because he streams like 2 hours a day. So I started picking up things naturally. Then I just got more intrigued in what this really was, and I started doing my own research, looking at all those people I just talked about. Then I just started learning and learning and learning. Then I started trying it out myself on the charts. And then after I got all those learnings from those legends, I created, it's still a very similar method to Mitch Ray's method, where you want like multiple variables at supports with divergence. But I would say have a more short-term trading style than Mitch Ray. Mitch Ray is a lot more longer term of a trader than me. I'm definitely like I'd say Mitch Ray is like a long-term swing trader, and I'm like a short-term swing trader, if that makes sense. So that's where we kind of differ. You should be careful streaming with no background. I don't know what that means. I can't even think about it. Yeah, you definitely want an edge with no background. Talking about like in my camera? I don't get it. Just elaborate on your point, 19 Scott. Yeah, we have a lot of educational resources that we've all put together in Discord. So check it out. Shout out to Cheddar Freeze for putting a lot of that stuff together as well. To Rooster, all the mods, all the people who asked for things in Discord. I put together a few links in the education tab. So yeah, I don't know. I feel like we're kind of done charting for now. I'm just kind of talking a little bit. Future is still up about 1/3%. Bitcoin still around 50K. And that's pretty much it. So yeah, good luck tomorrow. It's been a hectic week. Hopefully things get better for a lot of these stocks, but you never know, so manage your risk. And yeah, join the Discord, the link's in the description. Thank you for all the support. Have a good one. I'll see you tomorrow at 9 p.m. EST.